Good afternoon, this is Anka Metcalf with TradeOutLoud.com. Welcome to the weekly swing trading report for the week of May 8th. It is 5 p.m. Eastern Time on Monday, and we're going to start by overviewing the market, and we're going to start with the market indices. Let's take a first look at the Qs. Qs had set support last Thursday at 136.58 area, and today new high 137.84. The Qs are very much bullish, and more upside momentum can bring the price higher into the projected targets of 138.60 and further projections into the 139.50. Now these are short and medium term targets for the Qs. As you can see right now from this chart, the price is trading a little bit extended from any kind of support level that we have. First level is at 134, and then we have a secondary level of support at 130. So we're getting a little bit extended to the upside, and this can cause a little bit of a pullback right here into this area. So if the Qs pull back into the 136.58 level, then we can see whether a shallow or a more steeper pullback into the 134, 132, or 130 without disturbing the overall very strong uptrend that is going on. Also, let's take a look at the SPYs, and the SPYs are as well very bullish. In fact, the SPYs are trading near prior resistance area at 240.32. Today we did make a new high in the SPYs. However, we ended the day green. And support we do have at 137.73. The SPYs have been basing for a longer period of time in which the Qs have advanced. So 137.60 is the next support area. If we should get a pullback and if we should get rejection at this 140 level or where we were trading today, actually today we created a high of 139.92, so very close to this 240 area. But if we're gonna get if the price is going to get rejected at this area, any sell below the 239 level can bring the price back down to 237, and if this level is going to be breached, then we should look for a steeper pullback into the major support level at 232.50 and even 231. So this is what we can expect moving forward from the Qs. Now, I do have a list of stocks that are ready for this week, and for the first time in a very long period of time, I do see a lot of potential shorts on our radar. So I'm going to start with the first stock, which is Microsoft. Microsoft has been a very bullish stock. However, in the last few days, it has not participated with the Qs. Apple was running. We had some other stocks, Google, that were running. A lot of market stocks that were running, except for Microsoft. Microsoft developed a little bit of weakness. It does have a lot of bottoming tails on the daily chart. As you can see here, support today was set at $68.42. If we get a break above this level, above the $69 level, then we may continue higher. However, the fact that we have these bottoming tails here suggests that investors are not ready to get out of the trades. Every single time we're testing these support levels, these stocks are being bought. But things stand a little bit differently when you're looking at a weekly chart. The weekly chart is pending a sell right here. We do have a topping tail with an all-time high at 69.71, and if we break the 61.50 level, this can avalanche into a correction that can bring the price into $66, and this is what I'm looking at right now. So I'm going to look at Microsoft moving forward in two ways. First off, I'm going to look at the 60-minute chart for a potential continuation higher over $69. We can have another run up into this prior high that was set last week into 69.71. But if the price is going to get rejected from the $69 level, I'm going to look for a short, and actually you do have a very tight risk and a good reward level for this potential trade running lower. So I'm going to look for a break of 68.50 for the price to continue lower, and I'm going to look for a target area of $68 and even continuing lower into the 67, and the next target that I'm going to be looking for is going to be 66.30. So this is with Microsoft. Another stock that is one of my favorites right now on the radar is QCOM. And QCOM has, I'm going to put up the daily chart right here. QCOM is getting rejected at the $55 level. 55 is the ceiling for it right now. And I think that if it's going to break the $54.50 area, it has the potential to run all the way into the $52 area. Very tight, a very tight risk right here with a good reward potential moving lower. Another stock that is also on my radar, it will report earnings tomorrow after the market closes, and as long as we maintain this range, I'm going to look for a potential short. So we're going to watch and see how it reports, what the numbers are, what the earnings numbers are. So I'm not going to take a trade ahead of earnings. However, this is a great potential for a short under 102.50, potential target into the 95 and even into the 90 and lower, and even lower than that into 85 and close to $78. So it does have the potential to run down. Like I said, the key is going to be in the numbers. We do have descending tops right here. We do have equal bottoms up to this point. So we do have a major support level at a little above $95. And this area here holds the key. This could be a double take. It could actually be a buy over the 105 area. And then this can take the price higher back into the 110, back into the 120. It shows signs of weakening onto the weekly chart as well and onto the monthly chart. We do have a lot of topping tails present there that can suggest that investors want to leg out of this trade a little bit for a steeper correction so they can pick it up again at a better price and for a better risk reward rally. Tiffany's, no more diamonds. So take a look at the daily chart over here, $90.70 breakdown, possible breakdown here with the potential target back into the $87.90 and next target into the $85 area. We're still standing bullishly right here. We can see that Friday's price action where it's rejected today, and we erased all the gains that we have accumulated on Friday, and a trigger below, like I said, $91 can take the price lower in Tiffany's. And these are some of the shorts that I have. One other short again, and because we did start with these shorts, the price is weakening in AMD, and AMD is at this $10 area right here. We do also have this double bottom, and double bottom is present on the daily chart, also on the weekly chart. So below $10, if we break this $10 threshold, we can continue lower back into the $7.90, actually $8 area with a possible tight, very tight with possible, I would say, 25 to 30 cent risk at this point in AMD. Johnson & Johnson, after it had a really amazing rally at the beginning of the year, February, March, climactic move, extended move from any kind of support area, right now is just consolidating, and it is consolidating rather bearishly, because we are having these descending tops and we have created this weak range. However, this can be interpreted in two ways, and it's exactly like the NVIDIA trade. So over 124, we can see a potential move higher into the 125, 128 and back into the 129. However, if we break down below the 123 area, that's going to be the breakdown for a possible continuation back into the 121, 120, and back into the 119 level. And yes, possible visit of 117. Another weak stock that is on the radar is Ryder System. Ryder System has been consolidating here for several days. Take into consideration this is the daily chart, so it has been consolidating very weakly on the daily chart, the weekly chart as well. The weekly chart showing a bear sandwich and a breakdown over $67. Can potentially take the stock back down into the $62.29. So R is looking very, very weak. Another stock that is on my weak radar is 3M. 3M has triggered a daily sell close to the 200 price level. It's also psychological level. Profit is being taken here, and we can see a continuation into the 197 and 194.60 and even into the 193.50. So 3M on the list for the short side as well. Lennar is not looking very strong, and it's consolidating below the 50-period moving average. $50.20 is the ceiling resistance for this stock. A possible breakdown below $49.50 can bring the price lower into the $48, $47.50, and back into the $46 area. So the fact that is really weak, it has descending tops, it also has descending bottom formation, can trigger the price lower. CLX, and this is the last bearish stock that I have my list for this week. CLX has trigger already today, a daily sell. You can see that maximum volatility came in today, and we did have a pretty wide bar today, and I was waiting for this bar to close before I even look at the company to possible short this stock. So 133.90 is resistance, and the trigger is 132.16. So any pullback into the 132.16, 132.30, and even 132.40 area can be considered a short with potential target back into this last week's low, which is 127.62. And now let's take a look at some stocks that are still to the bull side, and I want to start with some financials. The fact that financials have not participated in the S&P small rally that I had today in the breakout, and also have not participated into the Qs. So we saw new high in the Qs, new high for the year in the Qs, but we didn't see financials participating to this rally, and this is a little bit worrisome because in a strong market we need to have the financials on our side, especially this may be one of the financials reaction to the fact that we're not getting a rate hike for this period of time. So let me just remind you that the Fed has announced that there may be 2 more rate hikes this year. What I truly think and believe is that most probably we're going to get a rate hike in the summer, a rate hike in the fall, and I don't think we're going to get a rate hike in December. So keep that in mind. This is just my opinion on when the next rate hikes might happen. This might be a reaction to the fact that the Fed has not raised the rates just yet. We have resistance at $24, psychological level as well. And if we get a break below, first of all, below this $23.60, we can see a continuation lower into the $23 and back into support at $22. And this is a cushion area between $22 and $22.20. So this is also a good risk to reward ratio trade right here. It's a double take. It could also be bullish because on a break of $24, let's not forget that the price is trading above the 50-period moving average. We can actually continue higher into the $25 area and $25.80. So this is going to be on a close look for short and for long, obviously, because the price is trading. The price is trending very bullishly above. We're having a change of trend from the pullback that we've had at the beginning of March, actually at the end of March, with the big flush bar that we had on March 21st. We're trying to recoup some of that correction, and a break over 24 may bring more buyers that are going to take price back up to 25 and 26. Another financial, so actually I only have 3 financials on my list, is Schwab, and the symbol is SCHW. Schwab is basing very bullishly onto the daily chart. We have support at $39.80, and we have just triggered today a daily buy, very bullish for this stock at this time. And a break above $40.50 can actually lead to a price continuation higher into the $41.30, $42.43, back into the $43.65, which is this year's high. So we do we can actually have a potential continuation higher. Let's not forget that over actually, I'm looking at the monthly chart right now, over $41, this can potentially be a monthly buy, which is very, very strong. Remember, we're always trading in the strongest direction of the trend, and that is a strong indication that if the price is going to reach this level, then we're going to get more follow through to the upside. Last but not least is MTB, and we have less volume in MTB, only 422,000 shares traded. However, the pattern looks very, very bullish. We have support at 155, secondary support level at 157.62. And we have a possible continuation higher if we break above this 160 level. So over 160, we can see more price. We can see the price moving higher back into this high of 173.72. And this is also valid for those of you that are trading options. Some other stocks that are on my bull scan. NTAP is one of the stocks that is looking again, double bias. First off, I'm gonna give you my bull bias, and this is because I am looking right now at the daily chart. So we have definite support at $39.30, and we have resistance at $40.40. If we break $40.40, we're going to get higher with profit targets into target profit into 42.32, 43.14. If the price is going to get rejected at $40.40, then we can look for a continuation lower back into the 39.30 area. That can take the price back lower into the $36. So that's the projected target. Philip Morris, very strong compared to Altria that is on the weak list. Philip Morris goes to the bull list with a trigger that happened last week. You could see it right here. After a consolidation for about 3 to 4 days, the price broke higher, getting into this first area of resistance. Usually what I like to say is the price pop a little higher, then pull back for me to like into this trade. So Philip Morris right now is trading very bullishly at this point, but is reaching this resistance. So for this point, it's just on my watch list, but it's definitely a bull watch. Caterpillar is on my bull list, and Caterpillar is setting support into a minor support area into the $90 area. So if we get a break into the $99 area, if we get a break over $100, we can see the price continuing higher into a target profit of 102. And then we can go for the secondary target back into this prior high of 105, even 106 area. ADI is also on my bullish list, although it's trading below these moving averages. The weekly chart suggests otherwise, and we're having a weekly trigger very, very soon, $56.60, 60 or 70 cents. If we break above this area, we may have a continuation higher into the $80 area and then back into these highs of 84.24. If the price is going to get rejected at this point, this can actually be a leg in continuation lower back into the next area of support, which is $68 and change. The next target, the next stock that I have on my list is CMI. CMI, very bullish. Support 143.70, resistance right here, and it is having a very it's having a very nice pattern onto the daily chart. So here we have support at 154.60, and we can have a daily trigger upcoming in the next few days over 156.70. That can take the price higher back into the 160, 163.36. Last but not least, HOLX, and this is the last stock that is on my list, is basing very bullishly. This can also be played on the hourly chart as an hourly breakout. You can see support here at 44.80, and a break over $45.50 can take the price higher. Price projections that continue all the way into the upper 48s and even $50. All right, so I did forget HON is the last, actually the last stock on the list. HON has been basing for quite some time, for a whole week. You could see that from Monday to Monday for a whole entire week has set support at 130. And if we're going to get a breakout over 131.50, we can see the price continuing higher into the 132, 33, 34, and 135 back into this high again right here. Thank you so much for tuning in. Thank you for listening in. If you would like to participate and if you would like to sign up for our swing trading alerts, you could visit our website. It is tradeoutloud.com. We do offer swing trading alerts for equities, and feel free to find out more information on our website by clicking the swing trading signal tab. And also, if you would like to sign up for our classes, visit our education page. We do offer comprehensive classes. If you would like to be an active investor, a swing trader, we have monthly classes, and if you would like to sign up or to receive more information about the class curriculum or the next scheduled class, feel free to email me at info@tradeoutloud.com. Thank you for tuning in, and I hope you all have a very profitable trading week.